Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight the bearish streak lingers on for the Australian dollar since striking the second objective at 70.95 and now recalls a fresh low for 2018 at 70.65 earlier in New York. The takeaway from the technical implications is oversold as you look at the RSI, but although the MACD is still supporting the bearish case. The previous day, a slightly more hawkish US Fed Chairman Jerome Powell warned reporters of a faster rate hike in the future, which in turn has kept the pressure on the Australian dollar, and now on the broader target looks towards the region of 69.4080. But in the interim, we are a little bit oversold, as I mentioned. The ADX is still trending, so I do expect to see the market look towards the region of 70.55 or down towards 70.2030 before any potential profit taking comes back into play. Looking to the top side, I see the resistance from 71.15 to 71.55 to 65 as a cap. Now later today, we do have the Australian retail sales report. And along with that, we have the US non-farm payrolls at 10:30 tonight, which is a key important to the market to keep the dollar index bullish. It is forecast that the Department of Labour is scheduled to release its non-farm payrolls for September, and economists are averaging a forecast around 180,000 jobs, the additional of 201,000 jobs in August. About 175 to 180,000 jobs are expected in the private sector. The jobless rate also may dip 0.1 percentage point to 3.8 from 3.9. The euro has managed to claw back some of its losses as the dollar did slip a little bit. Overnight, the dollar index, which measures a greenback strength of 6 major currencies, retreated from a 1.5 month low. In the euro, and also a 1.5 month high in the dollar index at 95.75, and posted a low at 95.17 to sell at 95.40. With the recent support crushed at 115.20, the market is expected to progress lower and to look towards the region of 113.70-75. But tonight's number is a key level, and if it does come out as expected, then I do expect to see further strength into the US dollar and weaker in the euro. Resistance at this stage is seen at 115.6580. Well, with the bearish divergence coming in to the dollar yen, the market slipped overnight, and as the bears gathered in numbers, pushed it through 114 handle. With the likelihood now of seeing a potential bull trap above 114, as the market may start soon battling out of its long position and therefore look towards the region of 113.40 to 112.60-75. The breaker last night of 113.85 should strengthen the bias to the downside. With any rallies, still look towards 114.25 to 114.75 as a failed zone, and I expect to see supply to return. The market rallied overnight for the pound with a little bit more of good news from the Brexit. Once again, the tabloids have reported that the proposal of avoiding extensive border checks on the Irish border, along with new plans according to the unnamed sources from the EU, said that a step in the right direction and finding a compromise possibility to the solution of the Brexit divorce. Nevertheless, I feel the market is setting itself up for another trap to the bearish case, and therefore could see the resistance from 130.55 send the market back down towards the target of 128.4080. There isn't much to say on gold. It's still trading sideways and still lacking direction, so therefore I remain neutral. And rounding up with oil, well, the market got a little bit overconfident when it comes to the bullish case for the oil. After backing away quite significantly, the market plummeted overnight of around 2.3%. Now, from the sell-off, the market may be looking towards its trigger level at 73.50. A break beneath there would give further scope to the downside of $72 to maybe $70 a barrel. So let's see if that comes through to play. Technically, it possibly may. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and also be on alert for the non-farm payrolls at 10:30 tonight in Sydney time. Again, thank you for joining me. I hope you enjoy the rest of the day and a great start to the new weekend.